Throughout the years, orb strategies are getting more and more popular, and let's just be honest, I completely do understand why, because they are simple and effective. And also, Tom Hugard, which is one of the best day traders right now on YouTube, made a significant return of few 100% from the beginning of this year, which is 2025, only using his orb strategy on DAX completely live. But the very reason why he actually made such a significant return do not lie within this concept, because orb alone is only a concept. It lies within his experience and within his strategy that he created based on this concept. And here's the truth, guys, it do not matter how complicated your day trading strategy is gonna be. At the end of the day, what really matters is your experience with it. That's why Tom Hugard made such a significant return, because he took orb concept, he created his own strategy with it, and he actually gathered experience throughout the years only using this one certain model. But of course, not everyone has so much time to actually gather the data, to actually gain the experience. That's why we can backtest to accelerate this process as much as we possibly can. So now finally, let me introduce you the orb concept and how you can actually implement it in your own trading strategy. ORB stands for opening range breakout. It is actually really easy to understand, because usually it's going to be presented as a simple time-based box on a chart. Time-based box that starts, in my case, on 9:30 New York local time and ends at 9:45 New York local time. Why this certain hours? Because that's when market open. That's when stock market open. That's when S&P 500, which we're gonna backtest today, opens. That's when Nasdaq opens, of course, when we talk about the futures market. And because of that, within this box, usually we're gonna see a nice movement that can be later on utilized as an indicator of where price is gonna go. But if you want to choose a different hours, of course, there are many different orbs out there, but think about it like that. You want to set the hours as close as possible to something that is close to market open, to open on a certain instrument, to open on a trading hours, to something that will usually provide you a lot of movement, a lot of volume. And now, as the name suggests, what we want to see is a breakout on the one side of this box. So we want to see breakout above this box, or we want to see breakout below of this box. And that's it. That's everything you need to know about the orb concept. But don't be fooled about how simple it looks. Because at the end of the day, what really matters and what really makes the orb concept powerful is your understanding of simple and clean price action. Because as you can see on this example, price only wicks the bottom of this range. And we don't want to trade the conditions when market simply consolidate. So you do not only have to see a simple box on the chart. What you need to understand is that you have to gain experience within the reading a simple and clean candlestick charts. So the very first thing that we're going to additionally utilize in our strategy is, of course, the multi-time frame analysis. We're going to use a 5-minute chart to filter out most of the false breakouts. And we're going to backtest all of this data on a software called Forex Tester Online, which is, of course, also the partner of this channel. But what is important is that I've, as a trader, choose them to be a partner of my channel. Why? Because you can buy their software for a lifetime. Which means that basically for the one-time payment, you will get lifetime updates of the software and lifetime updates of the market data within the software. So for me, that's a huge steal. And what is even better is that if you are watching it right now on the November 2025, there is a huge discount going on, which is a minus 50% Black Friday discount. And what is even better, since I'm the creator, you can increase this discount to 60%, so minus 60% for a lifetime access to software like this, only by using this code that you are seeing right now on the screen. So for me, there is no better deal right now on the market, because this is so cheap in terms of the value that it provides. So right now, let's move to backtesting, and we can even stay within this example. And as you can see on the 5-minute chart, none of these candles actually closed below or above this box. Look at the bodies of these candles. Look at the wicks. The only thing that we're seeing right now is the huge wicks below, which actually indicates some sort of the sweep or some sort of accumulation on the lower time frame. As you can see on the 1-minute time frame, this is exactly what I'm talking about. This is right now the accumulation within this range. So we are waiting for something better. Right now, price, as you can see on the lower time frame, went lower below of this range again, but look how 5-minute chart actually provides me the information of the wicks that this candle is actually doing, and it filters out all of the noise. So based only on a 1-minute chart, we could have already almost 2 losses because we are not using higher time frame analysis. So we are still gonna wait for something better, for a better signal to actually get into the trade. So right now is 11:05 New York local time, so it's still okay, but we want to see price accelerating because I want to see a nice movement. I don't want to see price wicking through this box, right? So we're gonna move it further, and as you can see right now, we can see the wicks on the top of the box. So this is another example of the false entry. This could be another losing trade just because we are not using 5-minute chart. And as you can see right now, this is another candle that is above the box, but I want to see any type of candle actually closing above or below of this box. So there are 2 minutes left. Right now this is 11:34, and right now this is a closure above of this box. So this indicates for me a great signal for entry for a long position. So that's exactly what I will do. And the thing you should ask is, of course, where should I put my stop loss? And of course, some of the traders that are using ORB as a concept will put their stop losses below or above the signal candle. Depends on the type of signal, if it's a buy or sell signal. But of course, sometimes, as in this example, we're gonna have a huge fair value gap just below our signal candle. But since this is an ORB strategy and we are looking for a breakout, I don't want to see price going lower into this retracement. I want to see price going higher and basically showing me the strength. That's why I am using the stop loss based on a 5-minute candle. I already gave my setup a proper type of stop loss. Also, what we're gonna do is we're gonna actively manage risk. So I'm not gonna leave a stop loss for the whole trade like this. So that's for me is great start to open the order. I'm gonna create a market order, and it's gonna be, of course, for 1%, nothing above 1%. I will use only 1% risk in this examples only. This is like my max risk also in my personal trading. So that's exactly what I'm gonna do. I'm gonna place a buy order, and I'm gonna, of course, move my my take profit higher because I'm not gonna use a fixed take profit. I basically will manage risk actively, and I want to squeeze out as much as I can from every single move. So I'm looking for right now for big candles. Basically, I'm looking for a candles exactly like that. I want to see a nice green candles also on a 5-minute chart, and as I mentioned earlier, if price will basically go even higher and close above these highs, I will decrease my risk exponentially just to basically be risk-free. And right now, this trade is completely risk-free because, as you can see, we closed another candle above our box. So that's how we read a price action actively. So even if price will go lower, that's okay. I have my costs covered right now, but I'm letting it run. All I can see it right now is that we have this nice green candles on a 5-minute chart, so that's cool. This is another really nice green candle. As you can see, we are in pretty nice profit of, let me find out, we have the profit of 1,434. So that's pretty nice, to be fair. That's pretty nice. So I will let it run. As you can see right now, we went lower within this candle, so this is not something I'm looking for. We are again right now on the green side of the market, but price is pretty consolidating, so I'm out. To be honest, this is not something I'm interested in. So yeah, so that's it. I'm closing the position. Why? Because as you can see right now, the black candles starting, that basically I can see more and more of the black candles, and also I can see that the new candle that just opened on the 1150, and we have 2 candles left, is basically showing me that price probably will go for a retracement. And as you can see right now, we can see a retracement. So that's it. That's how you should think about orb. That's how I think about orb. I think about orb as basically the small movement above or below of this range to utilize those closures above or, like I said, below. Let's move to another example. So welcome to another example. As you can see, we have our orb range already defined. So I'm gonna move tape a little bit further. And this is really interesting example. As you can see, price left volume imbalance, and also what price did is closed below this range on 1 minute chart. But what I want to see is how 5 minute chart will treat basically all of this. So right now we have this huge wick. That's okay, that's fine. And we closed also below this range, leaving this volume imbalance as also volume imbalance that got created within the breakout. Probably there were some sort of news, but what I can tell you based on my experience is that if the market is breaking out with the fair value gap, with the volume imbalance, it basically means that it's gonna go lower. So what I can do right now is to place my stop, basically to place my sell order. I will move my stop loss not even on the full range of this candle, but I will move it directly on the low of this volume imbalance, because if price wants to seek a retracement to this volume imbalance, that's basically means that my game plan for this day was wrong. So that's exactly what I'm gonna do. I'm gonna open a limit order. I'm gonna open the market order also for the 1%. Well, let's place our order. Let's place our market order. Of course, take profit right now is not defined, and we're gonna see what market is doing later on. As you can see, we are going a little bit lower. I really like it. To be fair, this is something I'm looking for in the days like that. A little bit of retracement is cool. It's okay. Even if market will go above this high to seek the retracement, it's still okay. But what I'm looking for is I'm looking for a nice push down right now, because we already found the retracement into this order block. So right now I'm moving my stop loss to break even. I don't want to be in the part of this trade anymore. This is something I would like to leave as a runner, to be honest. And if market gonna look for a retracement again, I will also get out of this trade. And this is 1043 right now. So that's cool. That's cool. We are going even lower. And to be honest, for me, that would be a nice way to probably manage this trade a little bit actively. So what I'm gonna do is I'm gonna partial close the probably 50% of this trade to take out a little bit of money, because I already gathered some of this move, and we are before 11 a.m. New York local time, which means that we're gonna see a retracement exactly as we can see right now. So that's pretty normal in terms of the price movements and in terms of how price actually moves. And right now we could see a little bit of consolidation. Like I said, this is normal in terms of these hours. I'm looking for something better after probably 1 p.m. or 2 p.m. New York local time. That would be even better. But right now, price is simply consolidating. So we're gonna move it a little bit further. And as you can see, for now, we cannot see anything special. And we are getting close to 1 p.m. So price is showing us again some little bit of strength. I'm gonna basically hold it to almost end of the session because I want to see if price is willing to give me something better, better price actually, to be honest. So we're just simply gonna let it run and maybe after, maybe on the start of the PM session, we're gonna see something better. Yeah, as you can see right now, price is going simply lower and lower, and that's cool. So I'm gonna move basically my take profit even lower. I'm gonna actively define what market is trying to do. Right now, I will probably also take out some of the profits. I will just right click it and partial close the 70% of the position. And what I will do is I will leave my take profit where it is right now. Maybe we will get even something lower. And exactly, that's what we got. That's what we got. And by actively managing our position, we got those partials right here, and we just basically had almost above 2% this day. Yeah, exactly. So that was a great day. That was a great example, to be honest, of nicely traded orb. So here we are on another example. As you can see here, the only thing that we can see right now is price going below of our orb range, but price is basically on a 5-minute chart showing us only the wicks below it. So this is not a good sign to sell. So I'm looking for something else. As you can see, price is probably right now going for this highs on the top of the orb. Or as you can see, again, we're gonna attack the lower side. That's pretty interesting. And I'm looking for a closure. Yeah, so I can see the closure of this candle. But what worries me out a little bit is the range of my stop loss, because as you can see, this is a pretty tight orb. And from my experience, I will tell you that the type orbs, when we have this type of candle that almost is like a whole range of orb, it indicates for me that this could be a ranging day, that this could be accumulation day. So to be honest, in my personal trading, this is not something I would like to be involved in, but for the purpose of this video, I'm gonna show you this type of trade also, but I will decrease my risk for 0.5%, because this is something that for almost like, I'm sure that almost for 90%, we're gonna see price going above this highs. That's based on my experience and the probability that I saw many examples like that. So yeah, so that's exactly what we're gonna look for right now. As you can see, price, yeah, as you can see right now, we don't even see price going below. Again, what we can see, price constantly like retracing after our entry. So the constant retracement. So this is not something I would like to be involved in. Again, failed to displace below this lows, and that indicates me that I was right. So as even Tom Hugard said, best loser wins, right? So you got to know how to take your losses and how to understand when, where to be exact, most of the opportunities lies in the market. And if price will close above this high, this for me indicates that that's a losing trade. And for almost 90% chances, we're gonna see price going higher right now above our stop loss. Yeah, exactly. That's what I'm saying. The ranging day accumulation. Yeah, that's what you will get from basically backtesting and getting experience from it. So here we are on another example. As you can see here, we see that the 1 minute closed below this range, but I want to see a 5 minute closure below of this range. And what this candle actually did, yeah, it closed below. It's a small close, but the rules are rules. In terms of opening range breakout, you want to be exact, pretty exact in terms of how price is actually closing above or below these ranges, because you want to have a chance, and you're basically looking for probabilities in terms of exactly this thing that happened right here. So some of you guys could see on the backtesting process that this is not something they would like to be involved in. Some of you probably will just basically move to another example, but this is pretty tradable. But what you need to understand is that probably this is not gonna be a huge move, to be fair, but still I'm looking for a sell right here based on my rules, because we took the previous trade. That's why I'm gonna also take this trade. And what I also like about this stop loss is that, as you can see, this stop loss would be above this swing high. So that's cool, because if market will reverse, it will means that it could be some sort of market structure shift. So I'm gonna place my market order. I'm gonna sell. Also, I will sell for 0.5%, because this is not a type of thing I would love to look for in the market. So that's why I'm actively using basically active risk management to define if this is something that is worth 1%. As you can see right now, the green candles are right here. So yeah, and that was huge. That was 10 o'clock, probably some sort of the news. Also on the next episode of this strategies, I will show you how you can basically use the news to determine if you should trade a certain environment. So yeah, I'm gonna look for something, of course, for something even lower. I'm gonna move my stop loss to break even, because I don't want to be a part of this trade when this will reverse on me. Also, what I will do right now is I will also probably take some of the partial right here, because that's a nice move. And my full stop loss my full take profit got taken out. I thought I'm gonna see a little bit of retracement, so probably I should put this. Probably I should leave it as it was from the beginning. But that's cool. That's still cool. This is a tricky example, as I mentioned, but price closed below, so the rules are the rules. So here we are on another example, and as you can see right now, price never actually closed above this range. We have 953 and 954. Yeah, so this is the end of this candle, and as you can see, we close above this range. Also, it's nice to consider that this on the end of this candle we should look for an entry, to be precise, and you should be pretty precise in your backtesting. So yeah, so where should I put my stop loss? This is a nice huge candle, so of course I'm gonna put my stop loss right here, right below it. I'm kind of worried about these equal lows, to be honest. This is something I'm kind of worried about. So from the beginning, I will move my stop right here on the bottom of this low, because I'm worried that price will basically take out this equal lows. So yeah, I will open my order, of course the market order, and this could be for a 1%, because these are the nice candles right here. This is also a nice candle right here. So yeah, so that's cool. That's what I will do. And yeah, and we're gonna see what price is willing to give us. As you can see right now, we are going higher, and I want to see how this 5-minute candle actually closed, and it closed pretty nice right now. But as you can see, we have this retracement into this fair value gap, and that's completely okay. As you can see here, price just basically had retracement for this for value gap, and that's completely fine. What I want to see price going, of course, a little bit higher. Right now, again, this for value gap, this is not something I'm pretty sure about. I should move my stop loss to break even right on this move. Yeah, that's exactly what I'm gonna do right now. Right now I'm gonna move it a little bit lower so the spreads will not get me, but this is not something I like, to be honest. If market decide to go lower, yeah, exactly, and this is a losing trade, and to be honest, it should be a break-even trade at this point. Because of this move, but mistakes happens. I'm only human after all, so these things can happen. Also, I want to see what price will do later on. As you can see, it went straight to our stop loss. So this is how we can actively decrease the risk after we can see that price went higher. But as you can see, didn't give us any type of the huge movement, and this could be easily break-even scenario. So welcome to another example. As you can see right now, price created this volume imbalance, which is weird, but okay. And as you can see, yeah, the volume imbalance just vanished and the only volume imbalance that is left is the volume imbalance right here. So this is something I'm pretty worried about in terms of this candle, to be honest. That was weird, but things happened. Of course, this is a great example of short right here. But what I'm worried about is this volume imbalance, that price will go straight to this volume imbalance right here. But rules are rules, so that's exactly what we're gonna do. I'm gonna make a market order. This is worth, of course, 1% easily. In terms of the stop loss, I want my stop loss right here on the top of this candle. I should include this volume imbalance, to be honest. I should include it, but let's just place an order, because like I said, most of you guys, of course, would not understand it the way I do right now. So market went a little bit lower, so that's fine. Now we are retracing higher. This is not something I like, to be honest, even higher right now. So yeah. And we're going straight for our stop loss. So I'm gonna close it even right now, even quicker, to decrease my loss a little bit. Yes, and as I mentioned, we went straight to this volume imbalance, and that was, like I said, this is something that could be easily predicted in the long run if you understand the price action and how it works. We went even higher, so that's interesting. And let's see what price done later on. As you can see, even later on, price actually move lower, but losses are the part of this game, so we need to understand how to lose, and that's completely fine. Let's move to another example. So welcome to another example, and we're gonna move a little bit faster so I could show you a little bit more. And as you can see, this is 10:03 and another candle 10:04, which means that we closed below of this range. And this is a nice candle. I like this candle because it's I would love to see a little bit more in terms of the closure, but it's still okay. So of course I'm gonna look for a sell right here. I'm gonna look for a sell. My stop is gonna be on the top of this candle. Also, I will include this volume imbalance. This is exactly what I'm gonna do because I'm worried that price is gonna go again on to this volume imbalance. So 1% risk in that case scenario, order market, and we are ready to go. Of course, maybe we will see even price going this much lower. So a retracement, yeah, that's something I was worried about. But still we can see what price will bring us later on. That's cool. That's this swing high. I was worried about price going straight into this volume imbalance. Also, I should be more aware of the spreads, because even if price would go straight to this volume imbalance, the spread would take me out. So that's nice to mention. Yeah, that's a nice candles, to be honest. That's a nice move. A little bit of consolidation. I want to see price going even lower for me to put my stop loss right there. Yeah, that's on the break even. So that's a great way for me to do it. So that's a great way to actually look for a break even. That's a great way also to take a partial, another 50% of my position. Also, to be honest, that should be maybe even like almost 75%. Yeah, I will close even more, another 50%, because that's huge in terms of the move. Like that's huge. Like I will see what price is gonna do later on, but if we're gonna go lower, that's gonna be even better. Yeah, as you can see right now, is price going straight to our break even probably. So yeah, or not. That's interesting. That's interesting. Yeah, and break even. So that's cool. Another winning trade. As you can see, we capitalized on this move. So that was pretty cool. So welcome to the last example for this episode. And as you can see right now, we took out the low of our range, but this is not enough for me. So I'm looking for more. And maybe this is 10-11. So this is not enough. Yeah, huge candles, guys. 10-13 and 10-14. Yeah, that's a huge candles. Yeah, so that's it for me in terms of the entry. I should look for a short right here. I'm a little bit worried about the range that I'm looking right now, but in terms of my stop loss right here. But that's completely fine. Like I'm gonna create a market order for like I would probably, in this case scenario, this is something I would risk like a 0.5% because it's a huge range for me. But yeah, let's do it 1%. Let's do the 1% right here. So what we can see right now is price going directly into these fair value gaps, and that's completely fine as long as we are not inverting this fair value gap. That's completely cool. But right now, this worries me a little bit. Yeah, this is not something I'm looking for, to be honest. This is gonna be a stop loss. So I'm closing this position because, as you can see, we went straight to the fair value gap, but yeah, and straight to our stop loss. If ORB, as you can see on the work on the examples, when we actually had the huge movement in the direction that ORB showed us, it usually happens pretty quickly. And this is something I'm not looking for in terms of this type of movement. So as you can see, I've backtested even a little bit more to find out what are the smart analytics built within the FTO app are telling me. Actually, as you can see, we have 31 trades to analyze, and I had some losses, I had some winning trades, I had some break even, as you can see right here. So let's analyze all of it. And also, as you can see, the 30 trades gave us almost 8% of gain on our capital, which is amazing. But as you can see, our behavioral traits are effective risk management, effective stress management, and resilience, and that's pretty cool. But we have lack of discipline, grid-driven decisions, and emotional reactivity. And let's read why the system are telling us the things like that. Try stopping out for the day after 2 consecutive losses to improve profits. But this is probably some sort of a mistake, because as you can see, it's showing us only plus $0. So this is some kind of a mistake. But what is not a mistake, and this is something that is my fault, is that we should cap the position when potential risk is more than 1%. Because as you can see on our one trade that I've had, I risked more than 1%. And as you can see, this is mistake on my side, so I should be more aware of that. And consider consciously increasing position size after winning strikes. And this is something that is pretty interesting, because this is something that most professional traders do. They actively increasing the size after the consecutive wins. But to be honest, in this case scenario, within this strategy, I would be not so sure to actually do it like this. Try using time-based exit rules or trailing stops. Implement time-based exit rules or trailing stop to prevent holding trades beyond their optimal duration. And this is something pretty important, to be honest, because these trades were closed significantly earlier than the average trade duration. Yeah, that's of course, but we close it because we saw that market is basically going against us. So this is not something that will actually help us. And try managing trades to achieve 2-to-1 risk to reward. And to be honest, this is something that of course we should think about in terms of our active risk management to achieve even more, because I have a tendency to close my partials a little bit sooner than I should, right? And this is my weakness, to be honest. This was always my weakness. I'm pretty bad at holding positions even longer than 1 to 2, even sometimes 1 to 1.5 in orb strategies. So this is something that I should of course consider. But our strengths, as you can see, there's a lot of it, and the system will tell you if something is wrong with your management, right? Like trading without stops. If you forget about stop losses, system will tell you about it. And median trade duration, this is pretty cool, 39 minutes. So as you can see, that's pretty awesome. And total trades, as you can see, we have the total of 25, but probably it should just adjust. But yeah, it probably counts also the trading dates, not the partials. So this is properly actually, and there is nothing to update, because of course when we open the position, when we open the trade, but we make a partial closes, we need to consider this as a one position. And as you can see, we had more winnings than losing. So as you can see, we had 68% win rate accuracy. So that's pretty cool. Of course, it's gonna probably decrease later on with time. Everything above 50% is awesome, to be fair. And also short and long positions, as you can see, it's almost 50%, and that's cool. But what system is telling us that we capitalize more on the long position. So that's something to consider, to be honest. But what I'm pretty interested in is how it looks in terms of the days, because that's something that usually gives us an opportunity to improve our strategy. That's why this smart analytics tool in Forex Tester app is such a go-to, in my opinion. So as you can see here, in terms of the day activity, we have most of our trades, of course, after 9, almost on the 10 o'clock, and we have 8 losing trades and 7 winning trades. But also at the 11 o'clock we have only winning trades. So that's pretty cool. Let me look at it in terms of the days of the week. As you can see, the Friday is amazing in terms of the movement of orb, and this is pretty like understandable, to be honest, because most of the time Friday are pretty trendy in terms of the one movement. So let's just say that market moved higher through the whole week, and sometimes Friday can be just simply opposite of that, and throughout the day is just basically from the beginning of the market open is just straight going straight into one direction. So as you can see, the Friday is 6 winning trades. Of course, we need to have a bigger example, and we're gonna create it, but as you can see, this is pretty awesome. The worst, it was Thursday. As you can see, the Thursday is pretty bad, but also most of the days are pretty cool. As you can see here, we can see our whole month, and that's pretty awesome. So thank you for watching, guys. I hope you liked this video. It was so cool in terms of backtesting orb. Of course, I'm gonna create even more. Now, as you can see, it's all about the expertise. It's all about how you can understand a clear price action movements. It's all about that, guys. It's all about that. It doesn't matter how complicated your strategy is. At the end of the day, it's all about how can you use it.